Chetan Seth is with us, APAC equity strategist at Nomura. Chetan, good morning. Good to have you here. Prashant this side. It's a pretty steep sell-off last night, actually, and it's not just equities, but bonds, dollar, everything. Is this largely to do with this White House Fed current dynamic?
Yeah, I mean, I think it's just a continuation of what we've seen for the U.S. markets for I guess last couple of months. Earlier, it was trade uncertainty, tariffs, and now clearly it seems it's essentially pressure from the Trump administration or Trump himself on Powell to cut rates. And I think what is really causing discomfort amongst financial markets participants is that the entire theme about U.S. exceptionalism is now a big question mark. So we are now seeing the dollar decline, bonds decline, U.S. equities decline. So I think it's all related. And to me, the U.S. market is now behaving like a typical emerging market, where you're now seeing all the three major asset classes now declining. So bonds, equities, as well as the dollar.
US market behaving like an emerging market. Imagine, here we are in this day, hearing you say that, Chetan. So absolutely, I mean, there is all kinds of mayhem, disarray, uncertainty that's plaguing the US. But what's happened in the last, I think, 2 odd weeks is that India is completely decoupled. And the market seems to be, pricing in the fact that perhaps we have the best case chance of striking a reasonably favorable deal. So do you think the risk-on sentiment in India is well placed?
Well, I think I would just say that I think India looks okay from a regional context. Look, I look at Asia, ex-Japan markets, and literally you go market by market. There are challenges in pretty much every market. North Asia is clearly more trade exposed. So whether it's China, Korea, Taiwan, those markets have problems. Southeast Asian markets are too small for some of these markets. It'll be very difficult to strike some of those trade deals. And then we have India, which has very less trade dependency with the US, as well as other North Asian markets. And then, of course, there's a possibility of a trade deal coming through as well. Interestingly, this morning I was highlighted by a colleague of mine that if you go on Polymarket, which is this betting website, which has lots of these surveys or poll questions, and you can actually put live money on the odds of a trade deal before July for India has the highest odds, around 70% when I saw this morning. So I think that, I think it makes sense. I'm not sure whether 70% is the correct number, but I think it makes sense that India might probably be in a better position to strike a deal. And for some of these Southeast Asian markets and even North Asia markets, it may not be so easy just because they're so much trade dependent. In Southeast Asia, if you think about it, there's a big Chinese investments in Southeast Asia. There's a big Chinese diaspora there, and I think it's quite possible that some of these negotiations probably will include isolating China from trade, which is not going to be easy for some of these nations. So I think in that stead, India looks okay, but that's not to say that stocks are out of the woods. I think it's going to be choppy. I think the market might also consolidate because at the end of the day, if let's say US equities is under pressure, the issue with India still is that we are at like 21, 22 times. It's not a cheap market. So stocks are not out of the woods.
All right. Hi, Chetan. Good morning. Good to see you in. Nigel on this side. On that note that you all put out in March, you all called out peak pessimism when the tariffs were announced. And that worked out well because you all had called out for Asian equity markets as well doing well if there is a drawdown. Now, what do you do from here? Because as you mentioned, India is not out of the woods. We have rallied close to 10% from the recent low. Though China as well is in a bit of a sticky spot. And over the last 6 months or so, China actually has done a relative outperformance in comparison to India. From here, within the Asian markets, what's the preference? And has India, post this run now, will you all not be so optimistic on prospects?
So I think there are three things which we are focused on. One is clearly trade and tariffs. So I would just say US versus ex-China trade partners, the deals that may be announced. I think with reasonable high probability, you can say that incrementally from here, on balance, you will probably see better news flow, at least on the tariffs or trade front. And that's so when we said peak pessimism, that is exactly what we had in mind. So I think again, you have to be patient because some of these things will take time to materialize. So I think that would be positive. I think the US-China trade deal, which is the second one, I think it's going to be very difficult. At least my sense is that some of the issues which US has with respect to China, these issues cannot be resolved quite quickly. And the longer these issues last and we don't see any sort of deal or some sort of a compromise between these two large economies, it will also have impact on pretty much the global economy as well as global financial assets, I would say. So I think that's the other thing. And the third one is what happens with the US economy. I think that obviously is dependent on point number one and point number two, what happens on the trade front. And I think only in months, few months time, we will know whether the US economy is undergoing a recession or there is kind of softish landing and data holds up. I would just say that it's going to be choppy. It's going to be volatile. Incrementally, news flow, at least on the tariff front, might be positive, but that does not mean that we are out of the woods, because in the end, I think the market will very intensely scrutinize how the US data, hard data, will emerge in the months ahead. I think the question is whether it's going to be bad, which is kind of expected, or it's going to be very bad, which I think is not priced in and not expected.
All right. Chetan, we'll leave it there. A good conversation as always. Thank you very much for joining us with that perspective.